my pleasure to be with you here today to talk about the Paycheck Protection Program and some of the other things that are available through this recent economic aid act that was passed at the end of December. What I'll try to do is keep this to about 20-30 minutes of presentation time, and then leave time for questions and answers. A lot of the stuff is still being built out because there are some differences in this act from the original CARES Act, and we have to change systems and procedures to fit the new legislation. And definitely heard the feedback that the smallest of small businesses didn't get the assistance they need. Traditionally underserved markets such as minority-owned business, women-owned businesses, veterans did not get what they need. So I think in this latest Economic Aid Act, they really tried to address some of that. One of the things that we did was to really try to bring in what we call community financial institutions, CFIs. And that's basically like your nonprofit, more mission-oriented lenders. There we go. More mission-oriented lenders, such as your community development financial institutions, micro lenders, some of the SBAs, what we call our certified development companies that deliver some of our programs, minority serving institutions or depository institutions, etc. And one of the things that SBA did, for example, we opened up our portal to accept applications from lenders as of last Monday, the 11th, and the only entities that could submit applications for their borrowers were those types of institutions. So we left the larger or delayed the larger financial institutions from accessing the system. So that way we could make sure that those smaller institutions, the more mission-oriented lenders that tend to work with our underserved markets and populations would get first dibs on the processing. There's also been money set aside specifically for loans made by those types of institutions, so that they will not get shut out of the funds, and their customers would not get shut off from accessing those funds. So today actually is the first day that all the lenders are going to be able to access the system. And SBA is also making sure they're monitoring, because they have the lenders coded, or depending on the type of lender, size of the lender. If it looks like there's a low participation or a lower drop in participation by those community financial institutions, they are willing to create a space by delaying some of the other lenders from processing their applications, for maybe 24, 48-hour periods, to allow those smaller lenders and mission-oriented lenders to go ahead and be able to access the system. In this particular act, you're going to hear a couple terms as it relates to PPP loans, the first draw and second draw. Well, first draw is basically someone or a business that did not, or an organization that did not receive a PPP loan in the first couple rounds, which the last round, the second round, had ended on August 8th of 2020. There are now additional entities that can apply for the PPP loans, and I'll talk a little bit about them in a minute. There's also an expanded list of eligible expenses that could be covered. Or if you remember, in addition to, of course, payroll and related expenses, the proceeds from a PPP loan could be used to cover business rent, business interest, mortgage interest payments, and utilities. They have added some additional expenses that can be covered with those proceeds. We also talked about the covered period, the period of time for which you would spend those PPP loan funds. I think in the first round, it was 8 weeks for everybody. Then people said that's not enough time. So in the second round, they made it 24 weeks. And probably the biggest feedback we got was, well, life isn't always divided between 8 weeks and 24 weeks. It's not that cut and dry. Some businesses, maybe it's 10 weeks, maybe it's 15 weeks. Why can't we pick the covered period that best fits our operation and type of business? So that flexibility was built into this new round of PPP, that a business or borrower can choose any covered period between 8 and 24 weeks that best suits their needs. In some cases, and this is still being worked out in terms of the details, but in some cases, businesses that received PPP loans before may be able to get an increase to their original PPP loan amount as opposed to a second loan. And I think there'll be more detail coming on that. That's something they are still working out. And the bottom line is that this round of PPP lending will be open until 11:59 p.m. on March 31st. Mm-hmm. In terms of the calculations, how do I figure out what my PPP loan amount is? It's still basically the same as before. You would figure out your monthly average payroll cost, okay? Multiply that by 2.5%. And then if you had an economic injury disaster loan or EIDL loan for COVID-19, you would add that amount, because the idea would be you would use the PPP loan to take out that EIDL loan. EIDL having a slightly higher interest rate than a PPP loan, which ideally would be forgiven anyhow. One change with the Act this time, once again, a lot of feedback is, well, what about businesses such as restaurants and accommodation businesses? Those were the ones that you would expect would be hardest hit by social distancing, shutdown orders, etc. People having less activity because people just are not having the social distance, etc. What they did in this act was they upped that factor for those businesses that have an industrial classification group code starting with the number 72. NAICS, National North American Industrial Classification System code, is a 6-digit code that basically describes the industry that a business is in, or an organization is in. Group 72 is basically food and accommodations group, and all those types of businesses fall into that group. So for them, that factor is a little higher. It's 3.5 times the average monthly payroll cost plus any EIDL, etc. And in terms of the first draw eligibility, I mentioned that there are some new types of entities that are eligible. Keeping in mind right now, it had been for-profit businesses, nonprofit organizations, including faith-based organizations and churches. That was something that was specifically designated in the CARES Act, and that was carried over to this latest piece of legislation. So those entities will continue to be, of course, eligible. But in addition to those, you have housing cooperatives, destination marketing organizations, which is basically like your tourist bureaus, visitors bureaus, chambers of commerce had not been in there before. They were added, and in some cases, under certain conditions, news organizations. Okay. On the second draw loan, what does that mean? Basically, the idea behind this is there are some businesses that were obviously more, even though everybody has been negatively impacted, some businesses were more negatively impacted than others, and want to try to provide an opportunity for them to receive additional assistance. So the Economic Aid Act came up with the idea of a second draw PPP loan. And that's basically for a business or organization that received a PPP before, the focus is going to be on 300 or less employees. Before the number was 500 or more or less. This time it's 300 or less. And here's the big caveat. They had to have suffered a 25% reduction in gross receipts. So at least as a minimum. So that would be the eligibility box for getting another loan. The calculations for that loan would be similar to what I just mentioned for the first draw. The limit on this particular loan would be $2 million. Okay. A business that had a PPP loan before wants to apply for the second PPP loan. They would also have to either have used that first PPP loan, or they can show that those proceeds from that first loan will be totally exhausted by the time that second draw PPP loan is dispersed, the funds for it. And basically, as I mentioned before, no more than 300 employees, and they can show that they had at least a 25% reduction in their gross receipts. And you might say, well, how do you determine that? You would look at comparable quarters in 2019 or 2019 rather, and 2020. So for example, let's say I would compare second quarter 2019, what my receipts were versus receipts during the second quarter in 2020. So the idea is if you were in business in 2019, then you have to come up with the comparable quarters. There are some adjustments for, I would say, seasonal businesses and maybe a couple other exceptions, but most businesses and organizations are going to fall in this using this comparable quarters method. Okay. The process, the idea of the PPP loan is that if you use at least 60% of the proceeds for the payroll expenses and related charges, and also other eligible expenses, and I can give you those now. In fact, in addition to the ones I just mentioned, they've added a couple other categories of expenses that are covered. And that would include operations expenditures, and that could be software, it can be cloud storage, and some HR management related expenses. Certain property damage costs, and specifically in the act, it's property damage caused by maybe if you were in an area of civil unrest, or there were protests this past summer, for example, in 2020. And insurance did not cover it or did not cover all of it. The part that wasn't covered could be an expense that you could take care of using the proceeds of your PPP loan. Supplier costs, anything related to fulfilling a contractual obligation with a supplier could be covered. And then, of course, worker protection costs. And that would be PPE, anything need to do upgraded sanitization of your workspace or facility, those costs could be covered with the proceeds. So those are the additional categories of costs that this new act allowed to allow the PPP loan to cover it. So when you get ready to seek forgiveness of the loan, you would go to the participating lender that you received the loan from. One good thing is they are coming up with a streamlined forgiveness application for loans 150 and below, which I know in Georgia, that was our, I think about 89% of the PPP loans in the first two rounds were 150 and under. So the good news is that probably the vast majority of loans for forgiveness would fall under this one-page forgiveness application. Not a whole lot of calculation as you had before, etc. Couple things to keep in mind too, because there are some things that were of concern with the first two rounds in terms of filing your income taxes, what was deductible, and what was covered with the PPP loan proceeds. So first of all, forgiven PPP loans are not taxable income. So normally if a debt is forgiven, and this is just speaking generally, the entity that is actually providing the loan or the obligation that cancels it, they would issue a 1099 saying, okay, we forgave that amount, so it's a windfall, so it's treated as income and it's taxed accordingly. That was not the intent of Congress with the forgiveness of PPP loans, but the act didn't specifically say that initially under the CARES Act, so they made sure that language was used in this act to specifically clarify that that's not going to be the case here. Also, there was an issue with if expenses of a business were covered with the PPP loan, could those businesses then again, when they get ready to file their business income tax returns, claim those as deductions? You know, I guess the idea was that somehow that is perceived or could be perceived as double dipping. Obviously, once again, that was not the intent of Congress to give with one hand and take away with the other. So in this latest act, they specifically state that that is not the case, that businesses, even if they use a PPP loan to cover certain expenses, those expenses can still be deducted on the income tax return as they always have. So that's very good news as well. One other thing, if you had a PPP loan before, you may have heard that with the EIDL economic injury disaster loans, you know, we had the advances or the grants up to $10,000 before, and before you had to deduct that amount from the forgiveness amount, which once again, that's like, okay, you gave with one hand and you took away with the other. So that was not Congress's intent with the original CARES Act. So that is no longer the case. So if you did receive an EIDL advance before, that is not going to be deducted from the forgiveness payment. And I think there's some things in the work to try to make the adjustment for that change. Okay. So basically, you have until March 31st to apply for either a first draw PPP loan or a second draw PPP loan. You would need to go to a participating lender to submit your application. A lot of lending institutions may have a version of the official application form on their website in electronic form. If not, you can go to the SBA's website, sba.gov/PPP, and pull the appropriate application from there. It might not be a bad idea, even if they have an online portal for the application, that you have that paper form as a worksheet to kind of help you work through, or if you're working with someone, you can work through it together, the calculations for coming up with the PPP loan amount and making sure that you have the appropriate information that would go into the electronic version. Okay. Basically, where SBA comes in is that we're on the back end, we're the guarantors of that loan. Should it not be forgiven and there's actually a loan, and if for whatever reason that borrower does not pay that now actual PPP loan, we are guaranteeing the loan 100%. So we're working on the back end on this. Okay, I think I'm getting a little sunshine here, so I'm gonna move that over. If you don't have a lender, we do have some tools online. We have the lender match tool where you can put in your zip code and see what lenders are in your area, and you can do it 5 miles out, 10-mile radius, however far out you want to go. Also, you can send us an email at Georgia, spelled out Georgia, at sba.gov. and we can get you with one of our lender relations specialists who can help you if you are having trouble locating a lender. If you have a banking relationship, definitely start with your current lending institution or banking institution to see if they're participating. More than likely they are in some form or fashion. So always start there, but there are tools if you don't have a banking relationship, or if in that rare instance your lending institution is not participating. A lot of the community financial institutions, we found out, like our micro lenders and other CDFIs, they are tending not to limit, which was an issue before, limit their giving of PPP loans to only their clients. They tend to be much more open. I think some of the smaller commercial lending institutions that are a little more community-based, several of them are definitely doing that as well. So there are people out there who are working with businesses that are not, that don't necessarily have a banking relationship. And that's something for the to-do list in the long run, to fix that. But for the short term, there are some options there. I think that was, I know one more thing. Wanted to go over some of the other COVID-19 related assistance. I know I focused on PPP, but there were some other things in that Economic Aid Act that were passed, as well as some things that SBA normally does that maybe have been enhanced to particularly help businesses impacted by COVID-19. So I'm going to run through those. If you're a current SBA borrower, in other words, you have a loan guaranteed by SBA or backed by SBA, either our 7A loan, guaranteed loan, or a 504 loan, or a loan from an SBA micro lender. Before, under the CARES Act, you got 6 months of principal and interest paid on your behalf on those loans, so that you didn't have to worry about how am I going to cover that debt service. Well, this particular Economic Aid Act continued that. Basically, for 3 months, which would be February, March, and April, the borrowers that received that assistance would get 3 more months of payments up to $9,000. And then after that 3-month period, businesses that were considered the most adversely impacted would be eligible for another 6 months of payments. And that would be like businesses in food service, accommodations, arts and entertainment, those where you have a lot of interaction, which of course has been curtailed because of the pandemic. And I think they'll be spelling that out a little bit more in terms of what that underserved definition is, but that is still available. Some of our current loan programs have been enhanced as well for now through the end of our fiscal year, which is September 30th. Our mainstay loan program, the 7A loan program, normally the guarantee is a maximum of 75% for loans, say 150 and above. That is now a 90% guarantee. People say, well, what does that mean? Well, that means that the lender, because once again, you're getting the loan through an SBA participating lender, and we're guaranteeing it on the back end. That lender is now only exposed 10% versus 25%. So the idea is to try and leverage that existing program with a higher guarantee to hopefully make it more attractive for them to lend to more people that maybe they wouldn't have with just a 75% guarantee. SBA Express, which is a streamlined loan guarantee application process, originally designed to try and encourage smaller loans being made by lending institutions. Normally that had been a maximum of $350,000. Under the CARES Act, the maximum was temporarily increased to $1 million. And under the Economic Aid Act, that 1 million max is still in place through the end of our fiscal year, September 30th. What's good about SBA Express is that a lot of times lenders will use this as a very I guess, a relatively easier way to provide lines of credit, revolving lines of credit with an SBA guarantee. You know, people always think of us as a term lender and being involved in that, but we do have some programs and products that address the need for revolving lines of credit, and SBA Express has been one of those main programs. So that's in place. Normally, there are guarantee fees based on the size of the guaranteed portion of your loan. There's a fee to cover that cost. For the lender, there is a servicing fee on SBA-backed loans. Those are being waived until September or through September 30th. So it makes the transaction a little cheaper. So those are some of the things they've done with the regular programs. Now, one program that was created under this Economic Aid Act is the Shirted Venues Operator Grants. And the idea behind this is to provide assistance to businesses that are basically venue operators or promoters, and that could include businesses such as theaters, you know, independent theaters, museums, independent movie theaters, talent representatives, and then at the last minute they threw in zoos and aquariums. Basically, you have to have at least a 25% reduction in revenues in those different enterprises. And how they're going to approach this is that they're going to give first priority to the firms and the entities that have had the highest revenue decreases and have 50 and fewer employees. So the way that I've seen that they're going to set it up, which hopefully it'll be taking applications in the next couple weeks or so. But what they'll do is start with those businesses that had a 90% revenue decrease or more and 50 and fewer employees. Then I think they'll go, the next batch will be 75% or greater, 50%. And then at the end, they'll go with any other entities that had at least a 25% decrease in revenues and employees up to 300. So there will be more coming out on that. That's going to be handled by our Office of Disaster Assistance. They've been charged with implementing that, so they're putting together the final guidance and the processes for taking in those applications. So definitely something to stay tuned with in the next couple of weeks or so, when hopefully that will be opening up. The economic energy disaster loans are EIDL. You know, there was a first time ever a national declaration, disaster declaration to allow EIDL based on the COVID-19 pandemic. Originally, that was supposed to have ended like mid-December, and it was extended to the end of December of 2020. And once the Economic Aid Act passed, then that was extended yet another year. So it'll be available until 2021. So 12/31/2021, or as long as funds last. Okay. So same provisions, 30-year term, interest rate for businesses would be 3.75%. If you're a nonprofit, it's 2.75%. A 1-year deferment on payment before you had to get that started, and no prepayment penalty if you pay ahead of, beforehand. One thing that is mentioned in the Act, and it's kind of a footnote right now, is the targeted EIDL grants. There was a provision in the Economic Aid Act for providing funds to go towards EIDL grants, similar to what occurred before, but a couple major exceptions. One, they want to focus on businesses in low-income areas on this round. And what they are actually going to do is start with businesses that got EIDL grants or advances last time, because the and I had many, many discussions about this. The CARES Act said up to $10,000 of the grants. There was literature that suggested Congress didn't mean that maybe they meant just a flat 10,000, but that's not what the statute said. So I think they're trying to address that this time by saying, okay, it's going to be $10,000. But they want to go back to those people who received the original EIDL grants who did not get 10,000. And of course, now it would have to be for those individuals that have businesses in low income areas. They would get the grants for the difference. So if you got 2,000 before, you'd get 8,000. Once they go through that group, then they're going to look at businesses and other organizations that had applications in at the time that we ran out of funds for the original EIDL grant, which was July 11th of 2020. And then address, and then go back and give the opportunity for low income or businesses in low income areas to get that difference as well, or to actually go in and apply for it. If there are funds left after that, then they will probably do something more open to anyone who had not had an opportunity to apply before. But once again, the focus is on low income areas, businesses located there. And there'll be more coming out on that as well. So that's the other things besides PPP that came out. And that was really all that I had. I know that was a lot. It'd been nice if I had the PowerPoint to go with it, but you do what you got to do. So definitely willing to entertain any questions. And if I don't have the answer offhand, I'm gonna make a note of it, and then we'll make sure that we get an answer back to you. And Ariel will help me do that. Trying to figure out why I got something. There we go. So are there any questions? Okay. You want to take questions, or you want me to do it, Ariel? Okay. I see one. What options are available for startups? Probably you'd be looking at our regular SBA offerings, not necessarily those specifically designed for COVID-19, because, basically, I think the CARES Act and this act all kind of go on the assumption that, business that were already operating when the pandemic started are the ones that those programs and resources would target. If you were starting a business, or you're starting a business now, then I would say, as far as funding, look at our microloan program, possibly our 7A program. It really depends on the type of business and how much do you need to start or to kind of continue that startup process for the business. If you've not done so, I would say maybe first sit down with one of our consulting services, like the Small Business Development Center. We partner with the University of Georgia, and there's 5 in metro area. I think for the Southern Crescent, the closest one would be at Clayton State. And, make an appointment. They are doing consulting via phone and Zoom. And you can kind of help you figure out how much you need. And then if you haven't done a business plan, maybe some other things, they can help you with that as well. But that's where I would start as far as a startup. Then is EIDL different from the grant? Yes. EIDL is a loan. It's an ongoing SBA program, so it wasn't created specifically to address COVID-19. And it's not forgivable like the PPP. So it would be a straight 30-year loan with the interest rate of 3.75 as a business. The EIDL grant is something you would not repay. Same thing with the shuttered venue operators grant. That is something you would not have to repay. Oh, please clarify if application will have to happen with a targeted EIDL or is it automatic? I think you probably would have to reapply. My understanding is our Office of Disaster Assistance is supposed to be reaching out to, first of all, those individuals that received the grant from the CARES Act, under that, to try and I guess based on whether they are actually in a low income area or not, that business, and go from there. And also, I think they're supposed to reach out as well to those individuals or those businesses that had an application in queue at the time. So you may have to reapply. I'm not sure logistically how that would work, but they would give you more direction as they reach out to you. But it's going to be a while provided that there's funds left after they take care of those two tranches of businesses for a more general first-time applicants. And the EIDL grant, if they received only 1,000, would they have to reapply for the grant to get the remaining funds? Should be getting a communication from the Office of Disaster Assistance on what exactly you would need to do to get the other 9,000. But I'll double check that as well. Okay. Okay, another one is okay, we did that one about the aisle. Do you need to have established corporate credit to apply for PPP loans? They will more than likely go with your personal. So the answer is no. You don't have to have a established business credit, because more than likely they would possibly look at your individual. But I think for PPP, since one, ideally the loan would be forgiven, and two, SBA is guaranteeing it 100%. I don't think that they're really going to be looking at the business other than are you in bankruptcy or something that would bring into question your financial, history in that sense. But and even under the Act, under the Economic Aid Act, there's a provision for if someone is, say, in bankruptcy, the SBA can make a determination as to whether that business could still get a PPP loan. That's something that's new, and they're going to have to provide the guidance and create the guidance on that. But that was put into the Act because there were instances and even some court cases around should people who are in Chapter 11 or automatically not be considered. So I think there will be some guidance to guide those particular situations. Okay. You would have to reapply. You would more than likely you would be applying for a second a second draw if your business meets the criteria for the second draw. There is a limited instance where people are going to technically get an increase to their prior PPP loan. It wouldn't be a second loan, but my understanding is that's in very narrow cases, and they're still coming up with the parameters for those situations in which that would happen. More than likely, it'd just be simply a second draw application, provided that you meet that criteria. And you would have to go through a lender because the PPP, we're on the back end as a guarantor. You'd have to go to a participating lender for that, to actually submit the application. Okay. Well, I think we're at, is there a lender website? There there is a lender, we call lender match, which is sort of a lender locator. And also you can actually put in a request. I'm looking to do a PPP loan. I think they'll ask you about 5 or 6 questions about your business and financials. And then the idea is lenders, you know, they've expressed what their parameters are. And if it's like a dating site, if the profiles are in sync, you will get a communication usually within 48 hours to 72 hours of lenders that are interested. But at a minimum, you can use that site to come up with different lenders. So you would go to the SBA website for that. Okay. Well, I know. Okay. Can we apply? Okay. Can we apply for a loan at 2.5 for 24 weeks? For PPP, you could. Normally, the 2.5 is a multiple that you would use with your monthly average payroll cost. You know, so it's monthly average payroll cost times 2.5%, unless you're in one of those industries that are like accommodation and food service, in which case that number would be 3.5 times your monthly average payroll. And you get to choose the covered period. So it can be anywhere from 8 to 24 weeks. It's no longer one or the other. You have a range between those two numbers. If I had a job in the business, can I receive? I remember that one came up a lot. If I had a job in a business, can I receive unemployment for my job and the PPP for my business? Because basically those are two separate buckets. You know, unemployment comes through, you know, Department of Labor, and of course there's now again slightly enhanced unemployment due to COVID-19. PPP, your business is separate. So if you had a job with another entity, you're probably okay. If you were self-employed, I think it gets a little trickier. You know, because then you're talking about the same thing. You're self-employed. I want to get unemployment. I have my own business, self-employed. I want PPP. That would get a little messier. But if you worked for someone else, you probably could. I would check with USDOL just to make sure. But I could see that happening more so than if you're trying to do it for the same self-employment. So, you know, sole proprietorship. That gets a little tricky. If an independent, do it? If independent, the 2.5 or 3.5 depends on the industry that your business falls under. In most cases, it's going to be 2.5. If you're in the food and accommodation type industry, it would be 3.5. There's also on the website, sba.gov/PPP, how to calculate your PPP loan amount based on the structure of the business. So if you're a sole proprietor, there's specific instructions on what numbers you would use to come up with a figure for yourself, for your sole proprietorship. Same thing with partnership, LLC, even I think they added farm businesses. So if you go to that document on at that website, be sure to get the one that is dated January 2021. There's one from the CARES Act previously, but they've updated it based on the current legislation. So it does walk you through how you would make that calculation based on the structure of your business. Okay. My own life, and that's great. I think the answer for that is no, because generally, if you're talking like about a direct sales plan, like the prepaid legal or Amway or whatever, yeah, normally those types of businesses are not eligible for SBA loans. So I think in this case, that would apply to PPP as well, if that's what you mean by direct sales business. Oh, somebody wants notification on you. And there's things that are still being refined and developed as we speak. So my advice would be continue to check back on our website, sba.gov/PPP. Also, if you don't follow us on Twitter, do that at SBA _ Georgia, spelled out GEORGIA. That is our Twitter handle, and because we're also using it to put out updates and maybe helpful hints or key things to remember about all this stuff, so you can get it in a nice, compact, more bite-sized pieces. Also, our email address is Georgia, spelled out, at sba.gov. But of course, you got my direct me to maybe spend a little more time on. Maybe we have the PowerPoint this time, next time, and just kind of continue to work through all this stuff until March 31st. Thank you all very much.